Good day, everyone. Today I will briefly present a financial analysis of Telekom Malaysia Berhad and Maxis Berhad, focusing on their business character from 2022 to 2024. Financial statement analysis evaluates a company's financial health by converting accounting data into insights on profitability, liquidity, and solvency. This is especially important in Malaysia's highly competitive and capital intensive telecommunication sector. In this study, Telekom Malaysia Berhad and Maxis Berhad are compared over a 3-year period.
Hi, my name is Samudrash Laki Ramachandran and my matrix number is A24A3082. So today I'll be presenting about business character on Telekom Berhad. TM owns and manages the country's core digital infrastructure that supports nationwide connectivity. Large investments are made in fiber network and digital infrastructure to support national development. Unify serves consumers. TM1 focuses on enterprise and government solutions. NTM Global handles wholesale and international connectivity. This reinforces TM's strategic role in supporting Malaysia's digital economy. And now I would like to talk about Maxis Berhad. So the company focuses more on delivering mobile and digital services rather than owning fixed line infrastructure. It positions itself as a premium mobile operator with emphasis on network quality and customer experience. This allows Maxis to build customer loyalty through bundled digital offerings. This competition can put pressure on pricing and profit margins. That's all for now from me. Thank you.
TM ratio analysis. First is current ratio. For the formula is current asset divided by current liabilities. For 2022, 0.92. For 2023, 0.87. For 2024, 1.31. Next is quick ratio. For the formula is current asset minus inventories divided by current liabilities. For 2022, 0.89. For 2023, 0.84. And for 2024, 1.27. Next is net working capital. For the formula is current asset minus current liability. For 2024, minus 154.4 ringgit. For 2023, minus 1021.41 ringgit. For 2024, 1514.4 ringgit. Next inventory turnover. For the formula is cost of goods sold divided by sell inventory. For 2022, 23.47 times. For 2023, 28.94 times. And for 2024, for 47.49 times. Collection period. For the formula is account receivable divided by daily sales. For 2022, 69.64 days. For 2023, 67.75 days. And for 2024, 32.66 days. Next is average receivable turnover. For the formula is annual credit sales divided by account receivable. For 2022, 5.24 times. For 2023, 5.39 times. And for 2024, 11.17 times. Total asset turnover. The formula is sell divided by total asset. For 2022, 0.52. For 2023, 0.53. And for 2024, 0.55. Next is fixed asset turnover. For the formula is sell divided by non-current asset. For 2022, 0.89 times. For 2023, 0.94 times. And for 2024, 1.02 debt ratio. For the formula is total debt divided by total asset. For 2022, 65.07 7%, for 2023 60%, and for 2024 is 16.5%. Next is return on equity. For the formula is net income divided by common equity. For 2022, 14.4%. For 2023, 20.7%. For 2024 is 19.9%. Time interest earned. For the formula is earning before interest tax divided by interest. For 2022, 5.18 times. For 2023, 5.9 times. For 2024, 7.63 times. Next is gross profit margin. The formula is gross profit divided by sales. For 2022, 40.9%. For 2023, 39.77%. For 2024, 61.8%. Operating profit margin. For the formula is operating profit divided by sales. For 2022, 17.25%. For 2023, 17.1%. And for 2024, 19.8%. Next is net profit margin. For the formula is earning after tax divided by sales. For 2022, 9.43%. For 2023, 15.4%. And for 2024, 17.2%.
First, current ratio. For the formula is current asset divided with current liabilities. For 2022, the answer is 0.82, and for 2023 is 0.56, and for 2024 is 0.52. And for quick ratio, the formula is current asset minus with inventory divided with current liabilities. For 2022 is 0.80, and for 2023 is 0.56, and then for 2024 is 0.43. Next, for net working capital, the formula is current asset minus current liability. For 2022, net working capital is negative 1,250.8. For 2023, net working capital is minus 2,381. For 2024, equal to minus 2,332. And then with the inventory turnover, the formula is sale COGS divided with sale inventory. For 2022, the inventory turnover is 30.4 times, while for 2023 is 18.39 times. And then with the 2024 equal 44.8 times. Average collection period, the formula is account receivable divided with daily credit sale. For 2022, the answer is 72.97 days, while 2023 is 87.3 days. And then for 2024 is 48.08 days. Next is average receivable turnover. The formula is annual credit sale divided with account receivable. For 2022, the answer is 5 times. And then for 2023 is 4.18 times. And for 2024 is 7.60 times. And then total asset turnover. The formula is sales divided with total asset. For 2022, the answer is 0.653, and for 2023 is 0.545, and for 2024 is 0.49. Next, fixed asset turnover. The formula is sales divided with non-current asset. For 2022 is 1.76 times. And then for 2023 is 1.89 times. And then for 2024 is 0.85 times. Next is debt ratio. The formula is total debt divided with total asset. For 2022 is 55.8%, and for 2023 is 43%, and for 2024 is 38%. Next, return on equity. The formula is net income divided with common equity. For 2022, the answer is 16.84%. For 2023, 70.3%. And then for 2024 is 18.8%. Next is time interest earned. The formula is earning before interest tax divided with interest. For 2022 is 8.35 times. For 2023 is 3.64 times. And for 2024 is 5.09 times. Next is gross profit margin. The formula is gross profit divided with sales. For 2022 is 59.4%, and for 2023 is 3.9%, and for 2024 is 67.6%. Next, for operation profit margin, the formula is operation profit EBIT divided with sales. For 2022 is 30.3%. For 2023 is 16.2%, and for 2024 the answer is 22%. Lastly, for net profit margin, the formula is earning after tax divided with sales. For 2022 is 13.95%, and for 2023 is 9.7%, and for 2024 is 13.3%.
Next up, we'll move to the recommendation on improvement for both company. Over the three-year periods, from 2022 to 2024, Telekom Malaysia demonstrated stronger overall financial performance compared to Maxis. Starting with Maxis, the company faced ongoing liquidity challenge. Its current and quick ratio remained below the benchmark of 1.0 alongside consistently negative net working capital. This indicates difficulty in meeting short-term obligations. To address this, Maxis should improve cash flow management, strengthen receivable collection, and renegotiate short-term liabilities. From an operational perspective, the decline in fixed asset turnover in 2024 suggests inefficient asset utilizations. Therefore, Maxis should review capital expenditure decision and focus on investment that generate higher returns while maintaining a cautious debt strategy. In contrast, Telekom Malaysia showed a strong financial recovery, particularly in 2024. Both its current and quick ratio exceed 1.0, and net working capital has turned positive, reflecting strong liquidity. TM also record significant improvements in profitability and activity ratios, supported by effective cost control and efficient asset management. In conclusions, while Maxis require improvement in liquidity and operational efficiency, Telekom Malaysia is financially stronger, more stable, and better positioned for sustainable long-term growth. That's all. Thank you.
Next up, I will outline expansion strategies for Telekom Malaysia and Maxis based on their 2022 and 2024 financial performance. Telekom Malaysia shows strong financial turnarounds. Current ratio improved to 1.31, which plus RM 1.5 billion working capital. Debt slashed to 16.5%, tied at 7.63 times. This support RM 2 to 3 billion annual capex from retained earning for Jendela 5G backhaul and FTTH nationwide. Three priorities that Telekom Malaysia should make is extend Telekom Malaysia global submarine cables into Asian for wholesale revenue, scale Telekom Malaysia One's IoT or cloud or cyber securities via government's contracts, and grow unified retails with 5G fixed wireless in rural areas, leveraging their 61.8% gross margin and 16.9 ROE. Next up, we'll move to the Maxis company expansions. Maxis faced liquidity challenge, current ratio down to 0.52, negative RM 2.3 billion working capital. Strategy is pace. First, optimize receivable and inventory to hit quick ratio above 0.8. Then, deploy RM1 to 1.5 billion yearly via bonds for convergence 2.0, premium postpaid, urban fiber, fintech bundle targeting 50% ARP growth, plus MVNO partnership and 5G edges computing. This capitalized on their 67.6% gross margin recoveries. Telekom Malaysia infrastructure heavy across Asians and rural Malaysia. Meanwhile, Maxis focuses urban service bundle. Telekom Malaysia leverage financial strength for infrastructure dominance. Meanwhile, Maxis build liquidity first for sustainable service growth. Both position for Malaysia digital economy. That's all. Thank you.
In conclusion, this report compares the financial performance of Telekom Malaysia and TM Maxis Berhad between 2022, 2023 and 2024. The results show that while both companies are least in the industry, they have a very different financial strategies. TM has a very stable financial position with strong liquidity and low debt because it focuses on owning Malaysia's national digital infrastructure. This makes TM a more resilient choice for a long-term growth. On the other hand, Maxis is highly efficient and provides a good return to its shareholders, but it faces a liquidity constraint, meaning it has less cash available for short-term needs. In summary, TMs excel in stability and solvency, while Maxis is better at operational agility and brand management. For understanding this difference, help investor and manager make a better decision in Malaysia's growing digital economy.